What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner's looking also better than you. You see that thing? Take the damn picture. You see it, Cliff. What it do, baby? How you doing, baby? Doing all right, man? What's up
doing
with you,
good,
baby?
doing good.
Good stuff, man. Man, how was the week, man? Was the week pretty good, man? Holla at the people.
Yeah, just busy, you know what I mean? But like I said, busy is always a good thing. So, it's all doing good, doing good.
Yes, sir. Now, did we get the bag?
Oh, yeah. We always trying to get that bag, man.
Yeah. We had to check into I Got That Bag University. That's what we do, baby. Man, for me, man, good week, man. Very, very, very busy, man. After the vault, man, I mean, business is just taking off. I mean, we have so many deals coming in, man. It's ridiculous right now. Cliff and I are looking at 4 apartment complexes, guys. Still, one in Wyoming, one in South Dakota, one in North Dakota, and also one in Michigan as well. And we're going through those numbers. These are distressed properties, and so we may have some deals. But we gotta deal busted the thing a little bit, man. But we're gonna jump into this thing, man, guys. Man, you know what we do every day, all day, man. Cliff, man, if you could, man, let people know what's going on, man. Tell everybody, man, what's going on with the market, man. How do people give a little bit of a current market analysis? Let's jump into it.
Also, everybody knows the basics, right? So we got inflation, prices are going up.
Yeah.
I think the last numbers came in around 8%.
Yeah.
They've been around 8% the last couple months. We had back-to-back quarters of negative GDP growth, which means everything's slowing down. Market's going down, real estate's going down, everything's going down because everybody's pulling their money out the market. So they're actually moving from typical assets, that's stocks, bonds, treasuries, real estate. They're pulling from there and they're starting to get into cash. Everybody's moving into cash. So you start seeing the dollar right now is actually pretty strong, which is very strong right now. It's actually the strongest it's been. I think it's normally you measure it against gold and the euro, right?
Yeah.
How we're doing against Europe. But but there is an index that you have for the dollar, and it's strong. It's been going up and up, and Europe is going down. So everybody's moving to cash right now. And as we continue to see it fall, I think you're going to see more people going into cash until the real signal that everybody's waiting on is the Fed. Once the Fed pulls back, I think you're going to have that first signal.
So when you say the dollar is strong and people hold on, is that a remnant because people are actually holding on to their cash versus spending the cash?
Right, exactly. Yeah.
Now, is that healthy for the economy though?
Nah, our economy is built on cash flow. They want you spending that money. That's what our whole economy is built on.
Yeah. So, guys, when you hear someone says, "Well, the dollar is strong," that's a bad sign. What that realistically means is people are not spending; they're hoarding their cash. There's a lot of cash on the sidelines. We're in the debtor nation, and so money has to begin to flow. As Cliff said, cash flow has to begin to flow. This whole Friday is going to be all about the current market right now. There's been some changes that went on that Cliff is going to give you guys the steelo on, man. So I want you to listen and listen well because you have a licensed appraiser, boots on the ground, that's actually giving you real life and real time information, okay? So I want to let Cliff go, y'all. So if you got a pen and paper, write them things down. So Cliff, man, if you could, but now that we kind of gave a little bit of a current market analysis, and we see that the dollar is getting stronger, which is not a good thing because people are holding on to that cash, man. What else are you seeing in the market that's kind of giving you a little bit of not a little bit, but a real uneasy type of feeling right now?
Real estate is falling. I mean, I'm seeing crazy stuff like last 90 days, $50,000 off a $400,000 house. So, like I said, typical price, like I'm saying 3 months ago, you could have maybe sold a house that was and sold it for about 400,000. Now you're probably looking around 350. just because of the
Wow.
interest rate hikes. So what's happening is all the prices are coming down with the interest rates, right? As they raise
Mhm.
the interest rates, prices just keep coming down. And the problem is we're not even close to touch really curbing inflation.
Mm.
We've dropped it maybe 1% so far. I think
Yeah.
the high was around 9, and we're down to 8. So the problem comes in saying if they want to get to 2, and 1% drop equals $50,000 drop in value,
Mm.
you gotta start understanding how far down are the values going to go before they start seeing the market turn around. Maybe it's another 100,000, maybe it's another 50,000. But
Mm.
well, yeah, I see it right now. I see that they have to raise interest rates probably another point and a half, right?
So what you're saying is this right here is actually happening, guys. Let me make it a little bit bigger for everybody to kind of see a little bit. Uh, well, this one's better. You know, here we go. This one's a lot better. Homeowner. This is from CNBC. Homeowners lose wealth as rising interest rates weigh on home values. Would that be what you was talking about just now, Cliff?
Right. Yep. So everybody's losing equity right now. So what
Wow.
happened is during COVID, they raised, or I'm gonna bet they lowered the interest rates, which
Mhm.
caused asset prices to go up. That's why everybody
Yeah.
saw that houses worth tons of money.
Yeah.
Now that they're reversing, and I want to
Mm.
make sure you understand this, they're reversing the fastest they have in human history. This has never
Woo.
occurred. This is your granddaddy didn't go through this. Your daddy didn't go through this. This is new. We've never done this before where we pumped trillions of dollars and then at the same time put on the brakes.
Wow.
Like within 2 years, we did both. This has never
Wow.
happened before. So we really, the Fed is guessing, everybody's guessing, but they know at the very least the market has to be down before they can reverse it. How far down? That's everybody's guessing on that.
Wow. 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 So you just made a point. You said that the Fed right now is guessing.
Oh yeah,
How you come to that conclusion, Cliff?
we well transitory, Dale. Transitory.
Yeah.
They don't know. you know,
Yeah.
you know what I mean?
Bruh, yeah, you can't make this up, man. You can't make it up, y'all. We're making up words now. We're redefining recessions now. You know what I'm talking
Right.
about? They making
Like,
it up, y'all.
like I mean, they literally when they said transitory, when they're saying things like that, and then all of a sudden they're going, the inflation went up 4% transitory, 5% transitory, 6%. How long? These are supposed to be the best people in the world, and they got it wrong at a multiple.
Multiple
If
times in two
that's like
years.
if that's like me and you having our business, I'm gonna come and you going to your boss and being like, I told you we gonna take a loss. It was gonna be a $200,000 loss. I told you that. My bad, I was wrong. It's a $2 million loss. You would be like,
I'll be like, you're fired. Get
right,
out. You're fired. So I'm trying to figure out why these people haven't been fired yet. Because this don't make no dang sense. I'm not trying to get political at all, guys, but we're looking for results. And you actually hearing from a licensed appraiser what's going on. People are losing equity, they're losing wealth because of interest rates are rising. The cost of capital is going higher. That's what he's actually saying.
this is how I kind of think of it. The Fed is independent,
Yeah.
but what they're really doing is to whoever's ever in power, they act
Mhm.
more like a lawyer. And
Mhm.
what I mean by that is they're going to who's ever in power and they're saying, what are you trying to get done? And we'll manufacture a way to try to make that happen.
Wow.
So when the people in power say, hey, I want to have more money go out. I want more
Mm.
money to reach more people. They say, okay, well, let's try to manufacture that result. And they start
Mm.
messing with things, buying, issuing more treasuries, lowering interest rates in order to accommodate who's ever in power, right? Because
Mm.
they need to stay in power. Because if they don't
Mm.
do, if they don't do what the president, whoever is in charge says, then they're gonna lose their job. And we all know everybody wants to keep their job and stay in their position. So they're gonna
Yes,
come up
sir.
with a way to make it work. And if it breaks, they can always go back to that same person and say, "Hey, what do
That's
you want to
right.
do now?"
Guys, he's spitting facts right now. So now we talked about the higher interest rates, and here's another thing: they're raising rates. In Cliff, is that affecting inflation?
Oh, it, it's affecting inflation in some cases, right? Like,
Okay.
so inflation goes a little bit everywhere. So basically, at the end of the day, inflation is due to like, well, there's a couple different reasons. We have energy inflation, right?
Yes.
We have supply chain, and then
Yeah.
we have straight up printed too much money.
That's right.
The interest rates can't affect energy, they can't affect supply chains. So the only thing they can do is try to soak up more money, and
That's
they
right.
can only get that from assets or different areas in the market that are interest rate sensitive.
Yeah.
Real estate being probably the number one of those.
Yeah. Yeah. And guys, so let's move the conversation forward. So now what's happening is you actually have the Federal Reserve raising rates. Okay. Inflation is not really tinkering that much at all, as far as it's not really bringing it down, because the reason why they raise the rates is because they're trying to slow down the economy. They're trying to
Mhm.
slow it down. The problem with that is there's no money flowing. And so when Cliff is saying they're trying to manufacture this thing, they're trying to manufacture the flowing of money by printing more money, by buying, by originating bonds, going to Treasury, have them writing a check for the bonds, and then the Federal Reserve buying those bonds right back from the Treasury. So they're increasing the balance sheet because of the fact that people are hoarding their money. They're hoarding it. They're not spending the money. That's why they're printing all this money out. That's why, which is causing for the inflation to actually happen. It's a very thing. Now, let's move forward, Cliff, real fast. Now, whenever you see, I'm gonna show you something, Cliff, and you give me what you think this reminds you of.
Oh yeah. This is what, 2008.
2008 again.
Yeah, I mean, it's everything is the basics,
Yes.
right? It's the
Yes.
basics.
Yes.
Like, if you can't do that, then everything else fails. And
That's
so the
right.
basic building block of a bank is, can you pay me back?
Yes.
It's simple.
Yes.
Can you pay me back? And
Simple.
the more confidence I have,
Yes.
then that should mean the less down payment.
Yes.
This is coming off like the opposite of that,
Mm.
right?
Mm.
So
Mm.
you should be showing your ability to pay at a high level. So the real question comes down to how they. I don't think they said how big this program is going to be. So depending on how big they're really going to do it, because they could say this all day long. They do it a couple spots, 2 or 3 cities,
Yeah.
and they kind of
Yeah.
move on. Or they're doing this on a wide scale,
Yeah.
and then they're adding a lot of these assets on the books. What you don't understand is these assets are not kept; they sell these.
Yes. 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 Now,
So what's that paper worth, and what does it do on the secondary
there
market?
you go. And notice, guys, these are conventional loans. These are not
Mhm.
government-backed loans, guys. Just let you know, the government ain't even confident in this. Uh-oh. But here's another stilo. But the government's buying it on the secondary market. Because remember, when COVID actually happened, this is really under the Trump administration. What they did when it came to PPP loans, they forced a lot of the secondary lenders to get out of the way, and the government began to buy those second tier type of loans on the secondary market. So yes, it is conventional, but you better believe the government is buying these back as well, because they have to leverage something to be able to print more money. Does that make sense, Cliff?
Right. Yep. I mean, the government wants to tax and spend. That's what they want to do.
Yes.
If they could pick anything, that's what they want to do. They want to take your money and spend it because they believe that if they take a portion of your money, they can spend it more effectively. That's their belief. That's what they're going
Yes.
off of.
Yes.
You know, and beliefs are great, but when we come to business, we need to be practical.
Yes.
Practical wins in business.
Yes.
You
All the
know,
time.
so you can have amazing inventions like the iPhone that come out of the market. You have amazing things that come out like the car that comes out
Yes.
of the marketplace, but it's
Yes.
still built on basic fundamentals of supply
Yes.
chain, like building a car. You got to have
Yes.
that down right? Or basic understanding of development in terms of coding for an iPhone. That still has basic fundamental things you have to have underlying it. So when they get into the
Yeah.
banking sector, like we were just talking about, they still need to make sure that those underlying principles are right on point.
So it sounds like what you're saying, Cliff, is what the banks are doing is they are sacrificing, and this is not really recently. This has been going on for a long period of time. They've sacrificed financial principles, good sound principles, in order for them to attain short-term goals. Would that be accurate?
Yeah. I mean,
Yes.
it's simple because my whole situation is why now?
Yeah.
What changed from 5 years ago, 10 years ago, 15 years ago? I'm still talking 2000s. I'm not even going,
Yeah.
you know what I'm saying? I'm talking about
Yeah.
2007 or 2015 or 2018. They could have done this earlier. If this product could make them money, they would have already been doing it.
So here's my question, then, Cliff, and this is where we kind of land the plane a little bit. Is this here? Is as a licensed appraiser, are you seeing a lot more foreclosed properties from banks that have asked you to appraise those properties, but they haven't brought them to market yet?
I've seen a little uptick early on when the
Mm,
inflation rates first started. They started unleaving some of their inventory, but so we're in a weird place in the real estate market because
mhm, mhm.
most people got a good interest rate
Yeah.
in the past 10 years. And if you got in the past 10 years, your interest rate's under 5%, or at least five, somewhere in the fives or lower. So if you got that, you ain't selling. Ain't nobody selling. You got a low, there's people right now, which is crazy, that they
Mhm.
bought a multifamily. They own
Yeah.
apartment complexes with a
Yeah.
3% right now interest rate.
Yeah.
Why would you
Yeah.
sell an apartment? If you got 3% on an apartment complex, you cash
Keep that
flowing
thing.
heavy
Keep
right
that
now.
thing, y'all. Keep that thing.
Right.
So 1031 exchange investment models is probably null and void right now, or very little of that going right now. Uh, a lot of buying distressed properties, fixing them up, increasing the value of it, and then flipping, selling, and putting it back on the market, which is a major source of new home inventory. That's gone. That's gone. A lot of home builders, major ones, some have actually, and those mid-tier ones have just left their projects, just left them, guys, because the
Yeah.
cost of goods have gotten too expensive for them to actually do it. It didn't make any sense. It's costing them instead of 200 grand to build, it's costing them 350 to build, 400,000 to build, and they got to sell it for 500. That doesn't make no sense to them at all. Period. At
Right.
all. Go ahead.
And yeah, you're seeing what's called a divergence, right? You have two different factors going different directions.
Mhm,
So, for
mhm.
example, what you talking about new construction, right? So think about it. We still have inflation, 8%, right? 9%, whatever it's going to be. So that means the price of goods are going up.
Yes.
Your price for shingles, wood, electrical materials, that's going
Yes.
up. But
Yes.
the interest rates are high. So the value of the home is going down.
Down.
So how
Yes.
can you make money as a builder if the cost of me more to build it, but the value of the prices are going down? And
Yeah.
it makes no sense. You can't make money that way. So they killed the new construction market. It's
Yes.
done.
Yes.
So
Mhm,
yeah,
mhm. That is the reason why the flipping model is not dead, but it is on life support right now.
yeah,
It's on life support.
yeah. I mean, the only way to do it is to buy at deep discounts,
Dig,
like I'm talking about real deep to make sure because
dig.
it's you don't know what you're buying into that the market could change. Now, me when I'm eyeing when I look
Mhm.
back, so I did a little bit of research. When I look back, it's like clockwork.
Yeah.
And I started doing this a couple years ago. This is simple,
Yeah.
right? You literally could buy houses every December to flip. Buy
Yeah.
houses during. Man, I'll give y'all a little. I'm putting y'all
Give
on
some
game.
game. Give some game. Give some game, baby.
So, right, December, January, February. If you buy during those are
Yeah.
market lows. That's a cyclical market. Every year,
Yes.
people stop selling houses during that time. It slows.
Yes.
You can pick
Yes.
up cheap properties, and every year, what's the high? It's June, July, August.
Yes,
So if
sir.
you just buy it in November, December, January, somewhere around there, and then you turn around and you just fix it up and wait to sell during probably July, August, around that area, right? June, July, August. You naturally create 3-4% spread. That's
correct.
market cycles. So
Yes.
you could do that every year. I've done that like every year. I just wait. This year I'm waiting for it. I'm waiting for it about December. When that market, because it's
Yeah.
already going down, right? But then you have
Yeah.
the market cycle, the natural yearly cycle playing. So it's really going to be low. In
Surely
December
is.
this year, watch.
Surely
That's
is.
going to be the time to buy. Buy as many as
All
you
the
can during
time.
that time period. I'm telling you.
All the time. And guys, I would tell you kind of some game for you guys is if you are a passive investor, okay, meaning that you don't want to be in the day-to-day operations of real estate, it'd probably be wise for you to invest in some type of fund scenario. I'm not a big fan of REITs. That's just my opinion. I would look at a fund scenario so you can actually put your money in a good velocity in a good environment to gain a high rate of return while it's secured by real estate, and you get to share in the profits of the actual project itself. You get a nice cash flow. Some could be anywhere from a 8, 9, 10%. Okay, secured by real estate. You'll be actually be on the actual title itself. Another thing is this here is um, if you are an active investor, I would tell you buy and hold. Right now, a good debt is your best friend. Good managed debt is your best friend. Okay, good managed debt. All right, and the higher the interest rate, the deeper the discount you need to get on in negotiating. Instead of passing that cost on to the consumer, you got to sharpen your skills on negotiating. It's very simple. Most businesses want to pass it on to the consumer, and then the consumer doesn't want to buy from you no more because now it's costing more for the same service versus you working hard to negotiate. That's what we kind of do. That's how we're able to buy properties so deep, so deep. Like like Cliff and I, and Jason and our team, we don't mind building it all. Why? Because we're buying so deep discount. We don't mind it at all. We know how to negotiate. Like the four properties that we got, that we're looking at, the four apartment complexes we're looking at, guys. I mean, we get them from things for a deep discount. I mean, deep discount. We're talking about 20, 30 cents. We ain't playing no games, guys. Playing no games. Now we're firing all the property managers, get them out the way. No problem with it all because the tenants in those properties are complaining about the property manager. We're listening to the consumers, and then we're actually applying with the consumers. Now, if you give them good service, the consumers will pay a higher lease payment. They'll pay it if you give them good service. It's time for entrepreneurs to become better entrepreneurs so that you produce a better product and service that will yield a higher yield of return. So it's a win-win it's a win for you and a win for the consumer. Would you agree, Cliff?
Oh yeah. I mean, at the end of the day, it's still consumer driven. We're a
It
consumer
is.
driven economy, so
Yes.
everything's always gonna go back to them. Uh, just get ready, sharpen your skills, and learn the process. And I think somebody's got an education that can teach you and walk you through
Ooh,
each step on how to learn this and pick up the properties and do what Dale's talking about. What am I talking about, Dale? What kind of education am I talking
man, y'all see it on the screen, y'all. It's called the Cash Flow Club. Y'all, we got a little update for you guys. It's done. Uh-oh. It's done, y'all. We just putting everything together, make sure it flows just right. Make sure the website is great for you. Make sure everything flows from start to finish. Again, we are trying to present a great product to you guys so that there's no complaints. We're also setting up a VIP community as well, to where on a monthly basis, you get to sit down with myself, Cliff, our attorneys, if need be, when it comes to legal counsel. If you don't have any as well, I suggest you have your own as well. Also, Jason as well. Also, we can look at your deal. We can process your deal, and also even fund your deal. Cliff will look at your property if he needs the scope of work at all. He'll help you draft it, guys. This is a full tip book, and guys, we went in on this one, guys. What we teaching you guys, man, folk pay $50 to $75,000 easy. How do I know that? I was at a conference and I was actually talking about some of our strategies that we do at this conference in Miami. They didn't know what the hell I was talking about. Because why? We bought that action. They were like, how the hell are you guys doing this? I'm like, because we can negotiate. We know what we're doing. We know how to structure deals. Most investors don't know how to properly structure their deals. Now, Cliff, how important is it to structure the deal the right way?
I mean, if you don't buy right, nothing else works. You can't. I mean, the only way really maybe is to increase the rent, but you're gonna do that anyway.
Yeah.
Right. So if you don't buy right,
yeah,
you stuck.
Yeah.
Right. So there's no way around it. So it's better to buy right and have upside than it is to negotiate and pay too much, and now you're stuck with the property.
That is correct. And again, guys, Cliff and I and Jason, and you may say, who's Jason? Jason Hanna. You're going to meet him. Okay. Jason is another one of us. He's another one of us within it. And what we want to really position you guys to flourish in this recession. We're in a recession and it's going to get worse, not better. So it's important for us to sharpen our skills together, guys. Lean in. Don't be a solopreneur. Be a entrepreneur that has a team around them, and watch what happens. You'll flourish. I believe this is going to be the biggest shift of wealth, and I think in humanity's history, because it's affecting every single industry. It really is. You agree, Cliff? You disagree?
Yeah, I mean, it's a manufactured crisis.
Yes.
And here's the thing: it's going to be a manufactured wealth creation as well.
It is.
Because they're raising interest rates. They
Yes.
cannot keep the interest rates high.
They can't.
They can't. So
They
once they get to a certain point, they're going to have to they're going to have to pull back interest rates little bit by little bit. And that is going to boom the economy. And when that happens, and you bought during when they were raising the interest rates, you don't make money.
I'm trying to told y'all. Me and Cliff saw this in 2008. I made a ton of money between 2008 and 2011. A ton of money. Because everybody was running away. Cliff and I were running toward it. Because we were saying deal. We talking about like deals that you'll drop and say, for real? That's it? Deals, guys. There's a reason why one of the courses in one of the courses in the training is subject to investing. That's going to be one of the best strategies moving forward. And guys, we go in. I'm talking about we go in on that one. All you need is in that course. I'm talking about all you need. And Cliff, man, tell them about your side of the course. Man. Tell them about the side of your course, man. Talk to them about your side, brother.
Mine's just I keep the basics, right?
Yes.
I'm a big believer in the basics. So this is blocking and tackling, right?
Yes.
So what I'm talking about is acquisition. What are the steps you need to take step by step in order to actually pick up a property, right? What software to use, right? Where you go to look to find information. How do you create a list? What kind of list? All that kind of information and guidance on how to do the basics. Because if you can do the basics, you can start scaling to doing even more difficult type of transactions.
Easy work. Yes, sir, guys. I'm telling. And then Jason's going over your power team. How to set up your power team. First of all, what is that? Who are the players involved, and what are their proper roles? The key word is proper roles. We're gonna have more courses coming out, guys. We didn't want to end at you with a whole bunch of information. We want to give you a good starting block, man. And these three are going to set you up just right. Including that is going to be, of course, VIP time with us, the community to discuss deals with your fellow entrepreneurs in real estate as well. Also, access to our fund as well, also for those passive investors, also. So it's going to be a kind of a one-stop shop for you guys, man. And you can always DM me and Cliff, or if those have a number, call us as well. We're going to have our staff there answer any questions as well, guys. We got it going on, man. But Cliff, that's all I have for today, man. You got anything you want to say before it's time to go?
Nah, man, that's it. Just keep investing, stay up on it every Friday.
Well, guys, man, we see y'all next Friday at the same bat time, same back channel, y'all. Thank y'all for your time, guys. Y'all, God bless you guys. Peace. You, real estate investor. Hey, let me ask you a quick question. How much money could you make if you had access to an unlimited amount of capital to acquire your real estate with no credit check, strictly asset-based financing, and quick closings? My name is Liddell Buggs, president of 316 Capital. We are a residential and commercial real estate finance company. Click on the link below or swipe up to have someone from our staff contact you to assist you in closing your next real estate transaction.